All right, good evening, everyone. It's Tim Davis coming to you guys again with another market review. Today is April 2nd, 2023, Sunday evening, and time is now about 9:35. I want to take a look at the futures market so I can show you guys what the markets is showing us. But I'm going to show you, start looking at the monthly charts because we just ended the month of March. And I'm going to show you guys what the market has been showing us over the past several months, even with all the bullish activity that we've seen in the last month. Here's what the market is showing us. So if we look at the move in October that we saw, look at the move in October that we saw, and price action move right back up to the 50-per moving average. I'm sorry, the 20-per moving average. The 20-per moving average is the blue line you see me have here. And price action has failed to really get a huge move, a continuation move above this 50-day moving average since we bounced from the October low. I'm going to October low. So this is the month of October. This is the month of November. And since they're high in November, if you look at each month after that, we have not had a high higher than the previous month. Notice that? They have not had a higher than the previous month in each of those months. So we have not been able to get above that price action there. And we're starting to be muted by the 20-per moving average. So that's something we got to keep in mind, folks. Even with all the bullishness that we've seen, the bulls are trying their best to fight back. But since that October bounce, this 20-per moving average has been keeping price muted. Okay, that's a Dow. Now let's take a look at a couple of the other indices. All right, let's take a look at the S&P E-minis. And you're going to see it's about the same scenario. Okay, we see the October bounce here, back up to the 20-per moving average. Look what the 20-per moving average is acting at, a huge area of resistance. And every time we touch this level, we have been pulling back. Every time we would touch this level, we get a pullback. So this 20-per moving average on the S&P futures is acting as a strong level of resistance. Extremely strong level of resistance. So this month of April is going to be a sell signal. Will we finally get a chance in S&P futures to close above this 20-per moving average? Or will we continue to get muted or get rejected right at this 20-per moving average for this month? So here's where we are now. So the month of April, the bulls, they want to really show force. They're going to have to really break well above this 20-per moving average and continue to go higher. But again, pretty much the market has been flat, folks. So since November, we have been flat. We have been unable to break above this key level of resistance. And if I was to put a price on that, let's take a look at it. Let's get a closer look at this price action. Here's a close look at this monthly chart. So right around a 4,200, at 4,200 level, right around those 4,200, S&P, the S&P futures have been unable to break above the level. Every time we would get there, we would fail. When we get close to it, we would fail. So we are getting very close to that level now. So do we break through that level or do we fail again? Do we fail? So that's what leads me to believe that, until the bulls really break above former levels of resistance on a monthly chart, it's still treading water. So The bulls would need to have a huge break above that 4,200 level in a big way and close above it by the end of the month. So we can break above it, you know, sometime in April. But if we don't close above it, you can break above it and pull right back down. Then it hasn't really made any headway. So that's something we got to keep in mind. Okay, we are really being muted by this 20-period moving average. This 20-period moving average is starting to act as a huge level of resistance. So if the bulls, then they back up towards this 4,200, they don't find a way to close above this 4,200 level by the end of April, then we're going to start to see prices get rejected by this 20-period moving average. That's what the SP futures look like on a monthly chart. Now let's take a look at the NASDAQ futures. All right, here's our NASDAQ futures. And looking at the NASDAQ futures on this monthly chart, we are just starting to get rejected. Just starting to see some type of resistance right at that 20-period moving average. Okay, so that is acting as a strong level of resistance. So that's 13 to 25 where we're at now. You got close to that level back here, which is back in right before October of last year. But look at the 20-period moving average. Again, it is acting as a strong level of resistance, folks. Okay, so we got down to these lows, but price action has been bouncing around for several months, and we started to go up again in 2023 on the NASDAQ futures, and look where it's starting to run into problems at. Nice big run up in March, but now we're right back at the top of this range, and we're right back at the 20-period moving average. So again, I see everybody looking at what happened on last month, but did the bulls really make any headway? Not yet, until they break well above major moving averages, especially this 20-period moving average on a monthly chart. It has to break above this level in a major way and close above it. It can break above it sometime in April, but it has to close above it. If we do not get that close above it, we'll start to probably see price action start to falter. And if one indice is giving us a fair warning in advance and already showing a major rejection, it has to be the Russell. Here's a monthly chart of the Russell. So the Russell is showing us, giving us fair warning in advance. And a lot of times, folks, if you see one indice doing one thing, then look for the others to eventually follow. The Russell has really been muted by this 20-period moving average on the monthly. It is, see the 20-period moving average starting to curve lower. That's what I expect to start to see happen on the other indices, and is using this 20-period moving average as a strong level of resistance. See how the Russell had made it up to this level back in so this is April, March, February, and got rejected at that 20-period moving average. Here's March. Made it up to this level, got rejected. Now we are starting April. And look how well defined that 20-period moving average is acting as resistance. Okay, so what I expect to see is this 20-period moving average to continue to act as resistance in with this Russell futures, and I think the other indices are going to start to show the same type of movement. We'll start to see some weakness in this market until prices break well above this 20-period moving average on this monthly chart. We're going to start to see some problems. Now, let's take a look at the tool that tracks the S&P 500 companies that's trading above that 200-day moving average. Show you guys what this is showing us. Here's the monthly chart of this tool. Now, same type of scenario, folks. Look at where we started to get rejected. This was the high. This percentage got up to as high as about almost 80, a little bit less than 80. Last month, we tried to challenge, with some bullishness, but could not get back up. to that highest point. Got muted right around there. And look at the oscillators. And the stochastic is starting to churn lower. The CCI is starting to churn lower. I want to take a look at this same tool. And take a look at the RSI. RSI is still just hanging around. Just hanging around this 50, just above this 50 level. So again, the momentum, we're back above 50, which back above 50%, which means you got more than 50% of stocks trading above the 200-day moving average. That's a good thing, but we're just hovering there. We have not made a run to take out this previous high of about 75% of stocks trading over the 200-day moving average. Have not made that run yet. In order for the bulls to really see some strength, we have to, in the month of April, we have to close above 75% of stocks trading above the 200-day moving average to see some real bullishness and possibly into a new bull market. But I think we're going to be muted. We still showing some stalling right around this level. So that's something we have to look forward to and keep an eye on. Let's look at one more, and that's crude oil. Now, crude oil, it's looking like it wants to bounce, and so I got to keep an eye on that. But right now, it also is running into some resistance. Let's look at a monthly chart of crude oil over here. Okay. Crude oil looks like it wants to bounce for us. I don't know if you guys been paying attention to what happened with OPEC this weekend about them starting to cut the amount of barrels they have on the market. That's a bullish signal. And look at what crude oil is doing. Crude oil dipped below this level of resistance here, support here, and got a bounce. Now, crude oil also is muted by 20 per moving average. So that's something we got to pay close attention to. And it's 20 per moving average right now. It's right around 86. In order for crude to maintain this upward trend, it will have to see it close above at least 80, but it's 20 per moving average, which should take crude back above 86. But it's showing all signs of a possible, trend reversal by looking at the full stochastics in oversold territory. Range percentage in oversold territory starting to hinge up. CCI oversold territory starting to hinge up on this monthly chart. So crude is going to be very interesting this month to pay close attention to. Here's a weekly chart of crude. Price action back above is 20 period moving average on a weekly chart. And is now running into this strong area of resistance. Every time we've gotten up with it, I got this trend line drawn. Every time we've gotten up this level, crude is pulled back. So let's see if it does it the same. We're right around this $82 level on crude. Let's see if we can bounce above this level over the coming weeks and hold above this level. All right, folks. Hopefully this is some information that you can use. I just wanted to show you guys monthly charts right now, because right now we just ended a month, and I want to show you guys where price action is and what the market is showing us right now. The market is showing us that the month of March ended at a level around a level of resistance. So now the trick is, can the bulls push well above those levels and close above those levels by the end of April? If not, we're going to start to see sometime in April, you'll see the market struggle if we don't push above those levels that I pointed out. So that's something to pay close attention to. One more thing we'll take a look at, the VIX futures. Forgot to look at that too. All right, here's VIX futures. Let's take a look at the monthly chart of VIX futures as well. Right now, VIX futures is up over 2%. VIX futures is just looking the opposite of our markets, and it is showing. Let me get rid of some of these trend lines. Get rid of this one, remove. Okay. Oversold territory on the monthly chart, and looking at the full stochastic explain percentage and the CCI. And look what's happening. Again, I told you guys to pay close attention to the VIX. And now we saw this lot of VIX whipsaw it over the past month. However, look where it bounced from back in February, right there. And then in March, right there. Now we're going to April. It is creating higher lows, folks. Higher lows on the monthly chart, which means that the VIX, even though we saw, a big pullback on this past month, it has not really lost the ground that it started to gain back in February. It's creating these high lows, which means the VIX is still on track to find a way to have a sustainable move higher, unless it starts to create lower lows on a monthly chart. Okay, so that's something to be mindful of and keep an eye on as well. The VIX is trying its best to start a sustained upward trend. All right, folks, that's all I have for you guys. Hopefully I can catch you guys sometime on the upcoming week. Again, looking at the VIX futures, currently up over 2%. All right, that's not positive for our markets, folks. That is negative. Now we're just up about 1.86%, but still in positive territory. And with the VIX showing higher lows over the past 2 months. All right, I'll catch you guys on the next video.